Hey everyone, and welcome back for another deep dive. Today, we're going to be looking at stablecoins.
Ooh, fun.
Yeah, maybe you've heard about them, maybe you're totally new to crypto, but they're this idea of a cryptocurrency that doesn't, fluctuate wildly in price like Bitcoin or Ether.
Yeah, those huge price swings can be pretty scary.
Totally. And I mean, how do you even use something like that for like everyday purchases?
Right,
Like,
exactly. That's the problem stablecoins are trying to solve. I mean, if you think about it, a currency really needs to be stable to work.
makes sense. Like if the value of the dollar changed by 10% every day.
Right, it'd be chaos. You couldn't really use it as like a reliable way to buy things or, track prices or save money.
Yeah, so stablecoins are trying to bring that kind of stability to the crypto world.
Exactly, and they do this by pegging their value to something else, something that's more stable.
So like what kinds of things are we talking about here?
Well, the most common approach is to peg them to fiat currencies like the US dollar.
Okay, so like for every stablecoin out there, there's an actual dollar sitting in a bank account somewhere.
Yeah, that's the basic idea, although it can get a little more complicated than that, but it's the simplest of points.
Makes sense. So is that the only way to do it?
Oh no, there are other ways too. For example, some stablecoins are backed by other cryptocurrencies.
Oh, wait a minute. Didn't you just say that cryptocurrencies are volatile? So how can you use something volatile to create something stable?
That's a great question. It's definitely a bit of a paradox, but one way they do it is through this thing called over-collateralization.
Over collateralization.
Yeah, so basically they hold more of the underlying cryptocurrency in reserve than the value of the stablecoin they're issuing.
Okay, I'm trying to wrap my head around this. So let's say a stablecoin is pegged to the US dollar,
Right.
and instead of holding $1 in reserve for every stablecoin, they might hold like $2 worth of Ether or something like that.
Exactly. It's like having a safety net.
Okay, that makes sense. So if the price of Ether goes down, they still have enough in reserve to back the stablecoin.
Right? It helps to cushion the blow from those price swings.
So it's like a balancing act.
Yeah, exactly. And then there are these things called algorithmic stablecoins, which try to achieve stability without any collateral at all.
No collateral at all. But how does that even work? It seems like trying to build a house without any foundation.
I know, right? It's pretty mind-bending, but it's a fascinating concept. Basically, they use algorithms and smart contracts to constantly adjust the supply of the stablecoin to try and keep its price stable.
So if the price starts to go down, the algorithm kicks in and reduces the supply to try to push it back up.
Exactly. It's like an algorithmic central bank.
Wow. Okay, so that's super complex.
It is, and it's also pretty risky because these algorithms are only as good as the code they're written with, and they can be vulnerable to things like exploits or unexpected market events.
So you're really relying on that algorithm to work perfectly.
Yeah, it's a bit of a tightrope walk for sure, but then there's another category we should talk about, commodity-backed stablecoins.
Commodity backed, like gold.
Yeah, gold is a popular one, but it could also be things like oil or real estate.
So instead of holding dollars or Bitcoin, they're holding actual gold bars in a vault somewhere.
That's the idea. It's like a more tangible way to back a stablecoin.
So it seems like there are a lot of different ways to create a stablecoin.
There are, and each approach has its own set of advantages and disadvantages.
So it's like you're always trading one set of risks for another.
Yeah, pretty much. And the choices that an issuer makes about how to achieve stability will ultimately determine the risks and benefits for the users.
Okay, so we've talked about the different types of stablecoins, but I'm curious about how they're actually being used in the real world.
Well, one area where they're making a big impact is in decentralized finance, or DeFi.
DeFi, okay, so what's that all about?
So basically, imagine a world where you can lend, borrow, and trade without relying on traditional banks or financial institutions.
Okay, so it's like a parallel financial system.
Yeah, you could say that, and stablecoins are a key ingredient in the system because they provide the stability that's needed to create things like lending platforms where users can earn interest on their stablecoin holdings.
So instead of earning like 0.05% interest at my bank, I could potentially earn a lot more by lending out my stablecoins on a DeFi platform.
Exactly. That's the potential, although, of course, there are risks involved as well. And it's not just lending. Stablecoins are being used in all sorts of DeFi applications like decentralized exchanges, prediction markets, and even as a way to send money across borders quickly and cheaply.
Wow, so it sounds like stablecoins are really shaking things up in the world of finance.
They definitely are, and it's still early days, so who knows what the future holds, but it's definitely an exciting space to watch.
Okay, so we talked about the good stuff, but what about the bad stuff? Have there been any like major failures or scandals in the stablecoin world?
Yeah, unfortunately, I mean, one of the most high-profile examples is the collapse of the Terra USD stablecoin.
Oh, yeah, I remember hearing about that. Wasn't that supposed to be algorithmically pegged to the US dollar?
Yeah, it was, and it was a pretty popular stablecoin for a while, but then the algorithm failed to maintain the peg during a period of market turmoil, and the whole thing just imploded.
Ouch, that must have been devastating for a lot of people.
It was. It wiped out billions of dollars in investments, and it really highlighted the risks involved with stablecoins, especially the algorithmic ones.
It's a good reminder that no investment is without risk.
Absolutely, and it's especially important to be cautious in the world of crypto because things can change very quickly.
All right, so we've got a good foundation on the different types of stablecoins, how they work, and some of the potential risks and benefits. Now, I'm curious about your thoughts on the bigger picture. Where do you see this all headed? What does the future hold for stablecoins?
Hmm. That's a tough question to answer, but I think it's safe to say that we're still in the early stages of the stablecoin revolution, and there's a lot of experimentation and innovation happening right now.
So buckle up. It's going to be a wild ride.
You got it. But I think that's what makes this space so exciting. We're witnessing the birth of a new financial system, and stablecoins are playing a key role in shaping that system.
It's definitely a lot to take in.
It is, but it's definitely worth paying attention to because stablecoins have the potential to change the way we think about money and finance.
I'm sure our listeners are just as intrigued as I am to see how stablecoins continue to evolve and disrupt the financial landscape. So thanks for joining us today and for sharing your insights.
It's been my pleasure, and I can't wait to see what the future holds for stablecoins. You know, it's interesting to think about the impact stablecoins could have in like emerging markets, places where traditional financial systems aren't really working that well.
Yeah, that's a really good point. We kind of take it for granted here, but for a lot of people around the world, just basic banking is a huge challenge.
Right, exactly. I mean, imagine not being able to easily send money to family in another country or constantly worrying about inflation eating away at your savings.
That's a reality for billions of people, and that's where stablecoins could really make a difference.
Yeah, for sure. Like one of the biggest promises of stablecoins is that they can provide a more accessible and affordable way to send and receive money, especially across borders.
I see. So like with traditional methods, those international transfers can take days and cost a fortune.
Exactly. But with stablecoins, it can happen almost instantly and for a fraction of the cost.
So it's like cutting out the middleman.
Yeah, exactly. And it's not just about remittances. Either stablecoins can also provide a hedge against inflation, especially in countries with volatile currencies.
Right, because if you're holding your savings in a stablecoin that's pegged to the US dollar, you're less exposed to those wild fluctuations.
Yeah, it's like having a safety net for your money.
So it sounds like stablecoins could be a real game changer for people in those situations.
They definitely have the potential to be, but of course, we also need to talk about the potential downsides.
Yeah, for sure. We've touched on some of them already, but let's dig a little deeper. What are some of the concerns that you have about stablecoins?
Well, one concern is the potential for regulatory overreach. I mean, right now, the stablecoin landscape is relatively unregulated, which is great for innovation.
Yeah, it lets things move quickly.
Right, but as stablecoins become more mainstream, governments and regulators are definitely going to start paying more attention.
That makes sense. It's kind of the same pattern we've seen with other technologies.
Right, and while some regulation is definitely necessary to protect consumers and prevent, illicit activities, there's also a risk that too much regulation could stifle innovation.
So it's about finding that balance.
Exactly. We need to find that sweet spot where we're protecting users but also allowing the technology to flourish.
Okay, that makes sense. So what else worries you about stablecoins?
Well, another concern is the potential for concentration of power.
Meaning?
Well, if a few large companies or institutions end up controlling most of the stablecoin market, it could create systemic risks and limit consumer choice.
It's like the too big to fail problem we've seen with traditional banks.
Exactly. If one of those dominant players were to fail, it could have a ripple effect throughout the entire ecosystem.
So we need to make sure that doesn't happen.
Right. We need to encourage diversity and competition in the stablecoin market.
So multiple players using different approaches.
Exactly. That way, the system is more resilient and less vulnerable to those kinds of risks.
Okay, that makes sense. We've got regulation, we've got concentration of power. Any other concerns?
Well, I think it's also important to remember that stable coins are not a silver bullet.
Meaning?
Well, they're a tool, and like any tool, they can be used for good or for bad.
Right, they're not inherently good or bad. It depends on how they're used.
Exactly, and it's up to all of us to make sure that they're used responsibly and ethically.
So we need to have those conversations about the ethical implications.
Absolutely. It's not just about the technology itself. It's about how we as a society choose to use it.
Okay, so we've talked about the potential benefits of stablecoins, the potential risks. Now, I want to get a little more philosophical here.
Okay, I'm game.
Do you think stablecoins could actually replace traditional currencies altogether?
Ooh, that's a big question.
Yeah, I know it's a bit out there, but I'm curious to hear your thoughts.
Well, I think it's definitely a possibility, but it's not a simple yes or no answer.
So walk me through the nuances.
Well, I mean, look at what stablecoins are already doing. They're offering a digital alternative to physical cash. They can be transferred across borders quickly and cheaply, and they can even be programmed to execute complex financial transactions.
So they're already pushing the boundaries of what we think of as money.
Exactly. And as the technology continues to evolve, it's not hard to imagine a future where stablecoins become the primary form of currency for certain types of transactions or even entire economies.
It's mind-blowing to think about.
It is, but it's important to remember that there are many different types of stablecoins out there, each with their own unique characteristics.
Right, so it's not like there's going to be one stablecoin to rule them all.
Exactly. And ultimately, the adoption of stablecoins, whether as a complement to traditional currencies or as a replacement for them, will depend on a lot of factors.
Like what kinds of factors?
Well, things like government regulations, consumer trust, technological advancements, the whole landscape of the financial system.
It sounds like there's a lot of uncertainty.
There is, but I think that's what makes it so exciting.
You're a glass half full kind of guy.
Yeah, I guess you could say that I think we're at a really pivotal moment in the evolution of finance, and stablecoins are right at the center of it.
So we've talked about the big picture stuff, but I'm also curious about how stablecoins could impact our everyday lives, like down the road.
Oh, absolutely. Like, just imagine walking into a coffee shop and paying with stablecoins straight from your phone.
Yeah, instead of using a credit card or cash.
Exactly. No more fumbling with change or worrying about those pesky transaction fees.
And it would be super fast, too, right? Like instant payments.
Yep, exactly. And think about traveling internationally, no more exchanging currencies at the airport or getting hit with those crazy fees for using your card abroad.
Yeah, that would be amazing. Just use your stablecoins wherever you go.
Exactly. It could make things so much simpler and cheaper.
But what about people who aren't so comfortable with technology or maybe don't have access to a smartphone or the internet? Would they be left behind?
That's a really important point, and it's something that developers and policymakers are thinking about. One solution could be to integrate stablecoin payments with those point-of-sale terminals that are already everywhere.
So even if you don't have a fancy phone, you could still use stablecoins.
Yeah, exactly. It would make it accessible to everyone.
And what about things like online micropayments? Have you thought about that?
Oh, absolutely. Stablecoins could be huge for that. Like, imagine being able to pay a few cents to read an article online or tip your favorite content creator.
Right. It could change the whole model for how we consume and pay for content.
Exactly. It could create all sorts of new opportunities for artists, writers, musicians, anyone who's creating valuable stuff online.
And it could also make it easier to donate to charities, right? Like microdonations.
Yeah, for sure. Lower fees, more transparency. It could really revolutionize charitable giving.
Wow. So it sounds like stablecoins could have a positive impact on a lot of different areas.
They definitely could, but of course there are still some challenges that need to be addressed.
Like what?
Well, I think one of the biggest ones is trust. I mean, stablecoins are still pretty new, and there's a lot of uncertainty about how they work and whether they're really stable.
So we need to educate people and build confidence in the system.
Exactly, and we also need clear and consistent regulations.
Yeah, right now it's kind of a Wild West out there.
It is, and that can be a barrier to adoption.
Makes sense. So regulation is key. And what about interoperability? Is that an issue?
Yeah, definitely. Right now, you've got all these different stablecoins operating on different blockchains, and it can be a pain to move them around.
So we need to find ways to connect those systems.
Exactly. We need more bridges between these different stablecoin islands.
Okay, so we've covered a lot of ground today. I guess the big question is, what's the one key takeaway you want our listeners to walk away with?
That's a good question. I think the most important thing to remember is that stablecoins are more than just a new technology. They're a new way of thinking about money.
It's a whole new paradigm.
Exactly. And it has the potential to create a more inclusive, efficient, and equitable financial system for everyone.
That's a powerful message. It's not just about disrupting the status quo. It's about building a better future.
Absolutely. And it's a future that we're all creating together.
Well said. It's been an awesome conversation. Really appreciate you taking the time to break all this down for us.
My pleasure anytime. Thanks for having me.
And that wraps up our deep dive into the world of stablecoins. Until next time, stay curious and keep exploring.